Hello, friends, and welcome to my YouTube channel Simply Stocks. And today it is Sunday and it is the question answer time. So let's answer all your questions and let's understand what I think about the market today. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I start with the question and answer session, here's a small request that kindly support me on Patreon and I'll make better videos and better analysis on YouTube. If you would understand that it takes a lot of time to do all the analysis and put up the video, record videos and everything else, with your kind support of even $2 a month, I'll be able to make better videos and motivated to make more. And once I have 100 patrons on the Patreon channel, I'll start with an education course on investments for no additional fee on YouTube. So I require capital to continue with the channel. For all those who have become patron of mine, thanks a lot for everything. Kindly support me here. Now about the question answers. Before that, I want to just let you know what I think about the Nifty and where the Nifty stands at the moment. The first thing is, I had told you about a Nifty fall probably 3 4 weeks back, and it looked like that the Nifty would go below 11,000. Many people refuted that 11,000 would be the bottom and so on and so forth. I believe that although I said 10,200, but I believe somewhere around 10,650, 10,700, this market will keep going there and will make a solid bottom around those levels, around 10,600, 650, because a lot of people in the market is talking about the market going to 10,200, 10,100 levels, and the markets never oblige people, or you can say the consensus view. So what will happen, I feel, is that next week we'll see another sharp cut, but then around 10,650, 700 max we'll see a bottom formed, and there would not be an immediate recovery to 11,200, 300 levels, but gradually the market by the end of this month would be above 11,400 levels. So I believe by April, and if somebody is buying an April call, I would suggest, and this is my personal opinion, that he can buy an April call of 11,400. I don't know what is the level it is trading at, but that is my personal opinion, that the markets would be much higher a month from here rather than lower, and they'll make the bottom in the next 1 week to 10 days time. So what needs to be done? Buy at current levels. So I was saying that don't buy at the moment and the market will fall. It has fallen, and I believe that buying at current levels, very good stocks that you always wanted to buy but were not able to, stocks like Bata, uh, FL that I have got into, and I'll discuss about FL later on as well. Many mid and small cap companies that were very expensive but now have become cheaper. Many large cap companies like the Bajaj twins have got cheaper than what they were before. HDFC Bank has got cheaper, and many other stocks. So look at those stocks, and whichever stocks you had in the shopping list and you wanted to always buy, go ahead and buy them, but don't buy junk. Do not fear this fall, but buy only top businesses which have very good cash flows, which have very good return ratios, profitability, and are reasonable valued, and you see the growth in them in the next 3 4 years. Go ahead and buy those companies. The market has already fallen 13% from the peak. Yes, it could very well fall 20% from the peak, but it looks very unlikely. And as we have heard about coronavirus, about the other things in China, it is coming down. Although in Italy the breakout has happened again, and in India already 30 odd cases, but everything is now in the know-how. Yes, we don't know that how much impact in the global economy it has happened, how much impact it has caused in the Indian economy, but at 10,600 these things should be priced in. Coming to the question answer points, Dr. Prasanna Saru has asked that me for analyzing Bear Crop Sciences, and I had told before that Bear Crop Sciences is one of the best agri company to be part of the stock market, and one can invest into it. I'll do a complete analysis of Bear Crop Sciences in a week to 10 days, so stay tuned for that. A view on Relaxo. Yes, Relaxo has run up a lot compared to Bata, and that's why you're looking at it. But I believe that comparatively, and there's a question on this as well, that whether to buy Bata or Relaxo. Bata has come down from the peak, and that is what I am saying. Buy the top businesses in that sector. So, yes, Relaxo might have come down even more or not have come down, and so on and so forth. But if the leader in that pack has come down, and many times these stocks go down 20%, 18, 20%, and then make new highs. So it's time to get into the leaders and just stay put, and you'll be more relaxed, and you'll see. And then finally you'll have a portfolio in which all the leaders will be in your portfolio after a year and a half, and you'll be in the green in all the difficult times. uh, Buy level of Hindustan Foods is asked by Pratik. I believe, Pratik, that you can buy Hindustan Foods at current levels or on any dips to 570 to 550 levels. Again, I have made a video on Hindustan Foods, and I want to show you here not a video but a whole analysis on Hindustan Foods at Patreon. So you look at this. So Hindustan Foods at attractive levels. This is for $10 patrons, and I have discussed all the SWOT analysis. So the complete SWOT analysis is present here. So kindly go ahead and uh, have a look at the patron network in which I have discussed about the company. But I believe it is a very good stock to buy, and probably 550, 570 levels would be very interesting levels to get into. Neeraj has asked me for a view on the metal sector by 2021. I believe one can trade into metals, so any more decline into the metal stocks, one can get into them. And whenever this problem of the virus subsides and goes away, then we'll see a sharp recovery in the metals. And whenever China comes back to even 70% of the capacity that it was before, I believe the metal stocks would run. But again, it is a very difficult thing to do. But if you're good at it, then trade into the metal stocks and start buying from now on. But again, you cannot invest into the metal sector for 2, 3, 4 years. What you can do is trade with stop losses and make money. Irfan has asked about Mahindra and Mahindra and his view, my view on Mahindra and Mahindra. If you look at the tractor sales that have come in for the February month, it has come down sharply, and it looks like that Escorts is taking market share away from Mahindra and Mahindra in the tractor segment. And if you look at the passenger car segment of M&M, then Maruti and other non-listed car companies are much more having much more higher market share in the passenger car vehicle segment. So I believe it Mahindra and Mahindra is an avoid, but you can take your own decision and consult your financial advisor. Ashish has asked for a view on ITC and NBCC. ITC and avoid. I don't like those companies, first of all, which are into sin businesses. Second, which have a lot of taxes on them, and government can come up with any sort of ban, taxes, etc. on that company. And so long as ITC has a major business as tobacco, I have not seen it perform really well. So ITC is an avoid. NBCC is an buy at these levels, but again be very cautious. Let the markets and the economy recover, and then get into NBCC. So, in my opinion, NBCC is a buy, but let it correct and let it come back. So, let the charts come back into focus again. Let it start with an up move again, and then get into NBCC. I still believe it is one of the best infrastructure company to invest in, because it has got business from the government, and it is virtually debt free, and you see the kind of projects that they are doing. So it is a buy, but again, it's going through its trouble. So wait for the things to improve and then get into it big time. Okay, Tara Krishna has asked me what is my view on Apollo tires. Apollo tires is in my opinion, I avoid tire stocks, and the reason for this is if you look back at the history in 2011, rubber prices were at its high, and these tire stocks were at its low. So something like Seat was at 100 rupees, I still remember, and Apollo tires would have been even lower, or so on and so forth. MRF was at around 10,000 at that point of time, round about 9,000, 10,000 rupees. And I used to look at MRF as being one of the most expensive stocks, just like many retail investors would. And that was my beginning into the stock market. And I believe 10,000 was very expensive and so on and so forth. But I believe the run up in the tire sector has already taken place over the last 7, 8 years. You can only milk these companies, and the if you want to buy a tire company, buy the best. I again say that no matter if something like MRF has been trading at 60,000, 55,000, I don't know the exact price, but if you have money and if you want to invest say 70, 80,000 into the market, buy one share of MRF. Even that will do compared to Apollo tires. uh, Okay, the electric vehicles may impact Castrol or lubricant companies. New Wealth Insights has said that yes, to an extent, yes, electric vehicles would do that. But when I made that video for Castrol, or whenever I make a video, I look into the current scenario and what lies ahead for the next 3 to 5 years, and I do not see electric vehicles taking over the market in the next 5 years, probably in the next 15 to 20 years. Yes, I see that electric vehicles, they have come into the market, yes, and but the infrastructure for electric vehicles, for charging the cars, and for, you can say, repairing of cars if there's some damage or anything else, is very less here in India. And so until that happens, that changes, I do not see electric vehicles taking over the market in that big manner. Also, the prices of the electric vehicles is not feasible at the moment, or not very economical for the people to buy into. You look at the economy, you look at what people are earning at the moment. There are job losses, there are fights for employment, etc. here in India, and so there are issues at the moment with the economy. If the economy does really well, probably electric vehicles will again come back into focus. So more questions that have come up from the viewers. Okay, so Devashish has asked a view on PVR and Inox Leisure. Avoid for the moment, at least till this virus thing ends, or at least till the charts show some positivity, and the stock reverses big time. And by reversal, I mean it goes past the 100 DMA, both the stocks. I believe PVR is better than Inox Leisure to get into, and I think this is a great opportunity to get into PVR or other companies which are directly impacted by this incident in China, because after 3 months, 6 months, 9 months, these things will go away and these stocks will again come back to their rational prices. So yes, get into PVR, but let the stock correct and let it come back into fashion. uh, Sharad Thorat has requested me for deep analysis on future consumer. I have noted that down, Sharad, and probably in 2 weeks' time, you'll get a complete analysis on future consumer. The only thing I can say is it is an avoid. I'll give you a detailed analysis on future consumer for sure. LG equipments. How do you find LG equipment is being asked by Samir Benod. Uh, LG equipment is a very good stock. They are into compressors and building motors, etc., and they are majorly into infrastructure as well as agri products. So they help in making those agriculture equipments. I believe they'll do well once the economy really comes back, especially the rural economy comes back. Then LG equipment really do well as a company, although the numbers are good, but they have been really good, say 2 3 years back. So the profitability, the growth of profitability has reduced over time, and that's why the stock is facing the brunt of the pressure. So probably get into other agri companies like Escorts, for instance, with such very good numbers. You can get into it, but do your own analysis. Buy the best in the business. That's what I am trying to tell you. Buy the best in any sector. So if you talk about agriculture, Bear Crop Sciences, something like VST Tillers, something like Escorts. These are top companies in that agri sector. If you look at a global agri, or you can say potassium products and all that, fertilizer products, then look at UPL. Although the stock is falling relentlessly, look at what it is doing. I'm not saying buy into it, but only look at top companies in any sector that you're getting into. So if you talking about metals, look at Tata Steel and JSW Steel. Don't go further than that. uh, and the likes. Again, view on metal industry by Vikas. So, metal industry, I've just discussed that you can get into metal stocks, but only trade into them whenever these things subside on the China front. The stocks will really do well, but then you have to get out of the stock also at the right time, because I don't see metals doing continuously well for 5 6 7 years. Okay, so Himankar is asking about Ruchi Soya. I believe it is an avoid. I have not looked at the price, but the kind of business Ruchi Soya is into, better to get into businesses which are related to FMCG or consumer products. So you can look at white goods companies that I've talked about. There's Blue Star, Voltas, Whirlpool, Symphony, Johnson Control, Hitachi. You can look at V-Guard, etc., which makes electrical products. Then you can look at FMCG companies like HUL, Asian Paints, Dabur, or not Asian Paints, but HUL, Dabur, etc. You can look at biscuit companies. There are paint companies, as I said, Asian Paints. So rather than getting into Ruchi Soya, if you have got into Ruchi Soya, then avoid it, or sell it on any kind of rise. Uh, Make a video on dredging corporation, or view on dredging corporation, as Karthikeyan. Dredging corporations, BEL, BEML, and other government type of companies, or companies which are related to government orders, like all these companies and Coal India, etc., would do well only when there is elections, only when strong government comes to power, or there is a very good notion that government is doing something for infrastructure and for these businesses. So some news is coming out about dredging corp or anything. Otherwise they'll not these stocks will not move. So you can trade into them, yes, but do not invest into such companies. Okay, so Arindam has asked me that have I bought FL? Yes, I have bought into FL India over the last week or 10 trading sessions by a small quantity. Not a lot of shares, but a little bit of shares I've got into FL India, and probably when I have funds, because I don't have funds at the moment. Whenever I have funds in the next 6 to 8 months, I'll buy more into FL India, or I'll buy into IRCTC. So I was confused between the two. IRCTC is good, but what I'm worried about the company, I'll discuss about it later on. But I have chosen FL and bought into FL, yes, a little bit. So about FL India, yes, I bought into FL India, and just a discussion about IRCTC. So I did not buy IRCTC because it was running on circuits all the time. That's the first thing. Second point is, yes, it is at attractive levels at the moment, but what you can do is buy into IRCTC when these things really end. So you might have March quarter that is washed out. You might have June quarter in which people do not travel. I have cancelled at least a couple of trips in which I was to go, and if there was no issue with the coronavirus or no issue with all these things, I would have gone and would have booked tickets. So that's how people are thinking. Unless it is extreme emergency, people are not traveling either by air or by train, and probably this is going to affect the numbers sharply in the March and the June quarter even. So this will come back by May, June or so. So probably the March numbers would not be that great, and the stock is expected to not move up. It might not correct. It might go to 1100 and stay between 1100 and 1300 for us to buy later on. That's why I avoided IRCTC, because we don't know what kind of number would come up. FL is away from that with the kind of business FL India is into. So I thought that although it can come down to 1500, but it would be a good level to get in right now, because we don't know where the bottom of the stock is. So more questions that have come up. Guide me on Motherson Sumi. It has high debt and low cash at the moment, Harsh. So whatever you have said in that comment is absolutely right. That the company is having now higher debt and generating lower amount of cash. But you look at the business and the business cycle that Motherson Sumi is into. Because of the kind of business cycle that Motherson Sumi is into, it is having trouble generating cash, because the business is impacted because of what is happening with the virus in the Europe. And look at what happened in Italy, and Italy is one of their biggest markets, and that's why the stock has broken 100 and is at 96. It might go to 80, but I'm very bullish on Motherson Sumi, and I feel this is just a phase, just a 1 quarter 2 quarter phase. It will again come back to 140, first of all 135, 140, and once the auto industry recovers, then this is easily a 300 rupees stock. So you don't make money or multi-baggers or 2 3x in just about 1 year or 6 months or 3 months, or taking a cute trade by knowing where the bottom is. You have to go through the troubles, you have to go through the pain for making money. And so I believe if you want to get into auto ancillary, then this is the probably the only stock, probably one of three or four stocks that you can get into, and that's why I'm positive. Otherwise, I'm not positive on the whole auto ancillary space. Similarly, in the auto industry, I'm positive on Maruti, I'm positive on Escorts, I'm positive on Bajaj, but I'm not positive on others. So it's not that I'm going to buy M&M with the lower sales, or Tata Motors because it has gone down so much. So let's buy Tata Motors and all that. So these are my personal opinion. You can take your own call. Uh, so Motilal Sajdev has asked Bandhan Bank and ITC. ITC I've just told you about. If the company has not given any sort of return in the last 8 10 years, forget about the business or anything else. If the company has not done well in the on as a stock front and not given you any return, don't get into it. Second thing is, if the company's charts or the stock charts doesn't seem to be coming back into picture, don't get into it. It is becoming like a coal India. It will give you very good dividend, but will it give returns? So because of a lot of factors that I've already discussed, avoid ITC. Bandhan Bank, I would say stay away from all banks, as I've mentioned again. Even HDFC Bank, unless they appoint somebody and people or the investors, the large investors, recognize that that person would be really good for HDFC, only then the stock will move. Who knows that the next person who comes at HDFC Bank might not do that well, and the stock may come back to its averages, or the averages that the bank trade for. So it's a lot of flux that is happening in the banking sector. Stay away from all sorts of bank. Okay, Arun Kumar has asked, can we average Thirumalai chemicals? You can average Thirumalai chemicals at the moment, but let the market end the downturn, and let it show some positive signals. Let it show some strength, the stock, and then get into it. Sujit has asked, what about India Bulls Ventures? So, if I look at India Bull Housing, India Bull Venture, and this India Bull Real Estate, and this whole group, I don't find comfort in buying it. See, I want to tell you one more thing with this question from Sujit, is that whenever you're buying a stock, this is not your full-time business, I'm sure, for at least 90% of you. And so you want to buy stocks in which you can sit quietly, have a good at least 18%, 15, 18% return minimum, no matter what happens in the market, and sleep well. the buying into companies like these or into businesses, you can say conglomerates like these, would not give you a very nice sleep. You'll have sleepless nights and you'll be very much disturbed. For instance, in Yes Bank, people who are getting into Yes Bank, yes, it might be saved and a lot of things may happen, but if SBI buys Yes Bank at 2 rupees, where would you think the price of the stock would be? It would be around 9-10 rupees at max. So probably it will go up from there, but who knows how the things are. SBI, once they get into the bank, they'll know that how bad the things are, because we don't know how bad things are with Rana Kapoor being arrested and so on and so forth. So don't get into businesses, don't get into cute trades in which you think and you know that there could be trouble, and you'll say that I'm just taking a risk so that my returns would be huge. But think on the other side, the returns could be zero as well. I'm not saying India Bulls Venture will go to zero or Yes Bank would do that, but buy into businesses which consistently give you very good returns. Look at a company like Gillette. From 6700 is down to 55, 5600. So it is at a reasonable level, and there are many consumer companies which are coming at reasonable levels at this point of time. SBI cards IPO, what is my opinion and now what to do? So the IPO has gone pretty well, not exceedingly well, but pretty well. Let it list, and probably if it lists less than 1,000, go ahead and buy. If it lists less than 1,200, go ahead and buy less. If it lists at more than 1,500, avoid it because it is expensive at over 15-1,600 rupees. View on Tata Chemicals. The Tata Group stocks are coming back into fashion. I believe rather than buying Tata Chemicals, as it has sold its more lucrative businesses to say the Tata Consumer products or Tata Consumer, that is the company. So any declines in Tata Consumer to 300 to 80 levels, go ahead and buy that rather than Tata Chemicals. Okay, Sachin has requested me for a video on Syngene. Sure, Sachin, over the next few weeks, you'll see a video on Syngene. There are a lot of stocks that are lined up, lot of videos that are lined up over the next 1 month. So I'll try to fit in Syngene in that as well. But in one line, it is a very good company to invest into, but expect only 16-18% return yearly. 15 to 18% return yearly over the next 5-6 years is expected, but it will be a safe return. So this was my video on the question answer session, and I try to answer all the questions that come in from the viewers. If I miss some questions, kindly put that up again. Thanks a lot for watching.